about 10 years ago, and this has been my first job. I was hired to start VetCore. VetCore is a restoration company. We do water, fire, mold, things like that, temporary roof tarping. But the thing that makes us unique is we primarily employ veterans. Our policy is veterans and those who share similar values. And then in 2019, about 8 months after I started, I had the opportunity to buy the company and become the owner. In 2019, we formed Team VetCore, which is a holding company composed of several subordinate LLCs that facilitates the franchising of VetCore. And so now we're a franchise system. We have 13 franchisees, mostly in Florida, but we also have one in Texas, Georgia, Virginia, Kentucky, Ohio, and Alabama. And through the concept of VetCore, not all of them are veterans. The vast majority are. We have 2 that are not. They see it as an opportunity, as an industry that is growing and it's not going anywhere. It's the routine stuff: dishwashers, ice makers, hot water heaters. And then we also respond to disasters and do a lot of roof tarping, tree removal, water damage, and things. So right now we're pretty busy with Hurricane Idalia that just came through Florida. That's our story. Interested to get to know everybody else on the panel and participate and help in any way I can. Thanks.
Thanks, Paul. Appreciate that. Dennis, why don't you go next?
Yeah, John, thanks so much for having me and for putting this together. I'm Dennis Volpe from New Hampshire, the great Granite State. I'm a Navy veteran, spent 20 years on the ship side of the Navy, Service Academy grad from Annapolis, small business owner, small business and entrepreneurial investor. We talked about this earlier, a recreational triathlete. And when I'm not spending time with talking to John about this stuff in terms of investing, I'm also a leadership consultant and an executive and small business coach with the Leadership Research Institute, and really just committed to the success of our veteran community through engagement, through connection, and through investing and coaching. Thanks for having me, John.
Thanks, Dennis. Appreciate that. Carrie, how about you?
Oh, thanks, John. Really appreciate the opportunity to be here. My name is Carrie Roger. I live in the Metro Atlanta area in Woodstock on the north side of town. I am a Marine veteran. My husband is a retired Marine also, and 8 years ago, we opened up a restaurant, conveniently called Semper Fi Bar and Grill. Today, we are now franchising that opportunity under a new brand as Rally Point Grill. Typically, simply because it's really hard for me to figure out how to sell a Semper Fi Bar and Grill to a guy who's in the Army, and I think you guys would agree with me. That's a little more difficult. Good news is that we started our franchise. We started putting the documents together in 2022, and in the spring of 2023, we sold our first franchise outside of Fort Gordon, which is going to be Fort Eisenhower, in Evans, Georgia, and that was honestly sold to a couple who was an Army major and his wife was in the Navy. That restaurant is already up and operating, and so I have been on the journey of finding and understanding how to access capital as a veteran in business. So super excited to be here today to really start sharing some of the information that we've been able to learn. Thank you, John.
Thanks, Carrie. And Rob, we do this in reverse order of looks, so that means you're last. So you've got the floor.
Wouldn't it be the first time you said that, John? And thank you for your handsome self, and really appreciate what you've done to kind of pull this group together. And really, thanks to everybody that's participating, not only on the panel, but certainly kind of listen to this. To those veterans who are in this space called entrepreneurship, kudos to you. It's really amazing that you're taking this journey, because it is a journey. We're going to talk a little bit about what it makes to be somebody who's successful in this space. So yeah, I'm an Army guy. I too went to West Point a long time ago. Last job of the Army in the Army Reserve was Chief of Staff of the Army Reserve Command at Fort Bragg. So about a 200,000 person unit, a couple tens of thousands of civilians as well in COVID. So really dynamic conversation about how to run large organizations, disparate through some pretty tough times. But now I'm an angel investor. As an Army Reserve guy for the last 25 years, was a serial entrepreneur in the life sciences world. Worked at corporate level as some corporate venture capitalists, and then worked at some smaller kind of startups, had a number of exits. Really excited to kind of share what this journey looks like. Now I'm a sin entrepreneur, so I own a couple of bakeries and a beer and wine store, so it's much better than dealing with corporate America. And then, of course, just started a neuroscience business or startup that's really gaining some traction. So it's a lot of fun. So I enjoy technology. I enjoy life sciences. Really look forward to this conversation about how to help folks kind of think about through this journey and pathway. Thanks.
Thanks, Rob. And just for myself, I spent 8 years in the Army as a junior officer, ROTC guy, and mostly in the 82nd. And spent some time in corporate America in 2003, did a startup, a software company, sold it 17 years later in 2020. And I like to say I had to have the smile surgically removed from my face when I did. And then the reason that's relevant is I learned a lot about raising capital and investors and all that. And even though I had a master's degree, it did not prepare me for what lied ahead in terms of dealing with investors and keeping a business alive. So today I'm part of Warrior Rising, and we help other veterans get into small business ownership on the nonprofit side. And as one of the partners of Valor Capital, we help people in general raise capital for their small businesses. We are an SEC registered broker dealer. So using SEC rules, we can develop securities for our clients who are small business owners through which people can invest. And we specialize in veterans, and most of our clients are veterans. And full disclosure, a couple are here today. Carrie and Paul are our clients, full disclosure. So well, without any further ado, so we've got a good mix of people on the panel. And again, thanks, guys, for making it. So we've got some like Dennis and Rob that have done more on the investing side, but as well as being entrepreneurs. And then we've got Carrie and Paul trying to scale their businesses as veteran entrepreneurs. And from different angles and perspectives, we've seen both the opportunities and the challenges that veterans have when it comes to capital. We were talking earlier, and the good news is we're not the only ones getting into focusing on veterans getting into small businesses. There's other great organizations like Local Vest, Veteran Ventures, Task Force X, and others that have propped up over the years, all trying to help do their part to help raise capital for veteran-owned organizations. That's great to see. But the one point I want to make is I was reading a Wall Street Journal article lately. I think the active component represents 0.5% of the American public now today. And all in with reserve and guard, it's still less than 2%. And it's at the historic lows. And the reason I bring that up is now if you look even deeper into that and look at proven leaders, people that have served, that have proven themselves to be good leaders, it's even smaller percentages. And the fact that nobody spends more than the Department of Defense developing leaders at a young age, put all that together, and the military does crank out some pretty good raw material as small business leaders. And, what we're all about collectively is trying to bring that to the benefit for the country and the economy at large. And part of that is what we're talking about today, marrying up capital that's out there with those that can lead effectively. So I've got a couple of canned questions I'm going to ask the panel. I've already prepped them on this, folks, so they should have good answers. But the first question is, what's the top one or two challenges that, in your experience, either as a veteran entrepreneur yourself or as an investor, what are the top one or two challenges you see veterans having when it comes to raising capital? And Carrie, I'd like to start with you.
I have a slight delay on turning my microphone on, so I appreciate that,
Okay.
John. So my journey in understanding capital really started about 18 months ago, even though we've been in business for 8 years. When we first started in business, the only thing I knew was an SBA loan. And so that's all I went for. But the last 18 months, I've really, really struggled on this journey to try to understand capital. And I think that that's one of the problems, one of the challenges that we have as veterans is we don't necessarily come prepared with the knowledge to understand capital, how to use capital, how to get capital. But on the flip side of that, this journey has really taught me that there's a lot more activity out there in the capital world for veterans than there ever was in the past. And so I think, first of all, really just understanding capital and capital sources, the difference between equity funding and debt funding, and the difference between private money versus bank money versus anything else. I think it's that whole journey of being able to understand the knowledge and the information. And then the second part is actually just tapping in to where is it? who has the money, how do I access the money, and creating that network sometimes I think can be difficult for us because we tend to network with our tribe, which is others who are like us, which may not always be others who are growing businesses that need capital. They're more like our veteran friends or other friends like that. So I think those were my personal hurdles, and I think that those are pretty valid hurdles out there from people I've talked to as well.
Yeah, great points. I share some of those in my own experience, but thanks for that. Dennis, how about you?
I think the biggest thing that I've seen as an investor and even as a transition coach for military veterans as they go from chapter 1 to chapter 2 is this innate fear to ask for support, to actually publicly admit that they can't do it on their own, even after spending time in the military, where it's a team sport, and realizing that it does in fact take a tribe to get us to where we want to go, right? You think about that African proverb, right? If you want to go fast, do it alone. If you want to go far, do it with friends. But it's that fear to say, yeah, you know what? I don't have, like Carrie said, I don't have all the knowledge. I don't have all the connections, and reaching out to the people within your tribe to actually gain that knowledge, gain that wisdom so you can move forward faster.
Yeah, that's a heck of a challenge, that's for sure. Paul, how about you?
Yeah, a couple things. One, I think there's a pervasive myth out there that there's this special source of grants and funding for veterans. And if there is, I haven't found it. I think that's basically a myth. But the other thing is, in general, we don't have a lot of experience in financial management just because we weren't running the military as a private organization. So we don't necessarily know how to read or manage based on a P&L or a balance sheet. Now, all those things are overcomable. This is just another metric. And through organizations, and Carrie and I were just talking about it, like Warrior Rising, Vet to CEO, there's a lot of other programs out there. You can learn that. But the other thing I think that's a challenge is because we don't necessarily understand the financial aspect. And I'll just use an example of like starting a franchise or starting any business. And let's say you have a sound business plan and a concept, but you don't have the money because we haven't been, we've been in the service business most of our lives, not in the building wealth business. And we were helping others. So we don't have this tremendous wealth sitting around where you can just start a business. Well, you can get capital, you can get access to capital, like Carrie mentioned, through an SBA loan. But sometimes I think for veterans, it seems overwhelming because we don't have that understanding of financial management and haven't been in that world. So let's say, for example, you need a $300,000 loan to start a franchise. They said, I don't have, you need $300,000. I don't have $300,000. Well, you don't have to have it. You can use OPM, other people's money and sources. And what we typically don't understand is, let's say you get that $300,000 SBA loan, which is amortized over 10 years. What that turns into, your debts, your monthly debt service, is really something that's achievable. That just means you have to cover that monthly payment, just like you would for a house payment. We do it, without thinking twice for a house payment. And you can put together a business plan that shows, here's my glide path to get to revenue. Here's what I think I'm going to achieve in revenue. Here's what I need to become profitable. So I need, 6 months operating capital to get to a profitability standpoint. And then I'm going to have accounts receivable, and I'm going to have a lag in collecting and all that kind of stuff. But really, I need $300,000 to do that. But the debt service to do that is X, Y, and Z, depending on interest rates and all that kind of stuff. And we don't necessarily understand that because we don't have very much experience in that kind of world.
Yeah, well said. And it's kind of like financial literacy for business. It's almost like learning a language if you think about it, right? If you're going to be an entrepreneur, it's that much commitment to becoming fluent in it. And oftentimes we don't understand it as entrepreneurs. I know I didn't, even though I went to grad school before I started my business, but that's a good point. But I think to the topic of today, it's even just as far into potential investors who many times for the first time might be investing in a private business, on how that works as well. So that it's a good point, Paul. And I think it's a fair point on both sides. Rob, thoughts on the topic?
Yeah. So this is an amazing topic to kind of talk about, because one of the failures of small businesses, whether it's veteran owned or not, are those that are undercapitalized and don't have a right product market fit. So that's part of the going in assumption, is that you do your due diligence, you structure your business the right way. Even in these very challenging investment times today, where the cost of capital, whether it's venture debt or it's venture or it's just going to the bank or it's family, friends, and fools, right? That comes at a high cost right now versus a couple of years ago where things were a little different. But there is money out there, good stories, good teams, good founders will find money. It just takes time, due diligence, and a lot of effort to go find it. And so I would offer, you cast the net widely. In most states, they have military business centers. So in North Carolina, we have the North Carolina Military Business Center that helps look at non-dilutive grant money. It looks at federal, state, and local level opportunities to provide. They have industry expansion. So if you're kind of stage one, you're looking to grow, there's some monies for kind of expansion that way. And these are not always grants, but it is not always non-dilutive, but it is an opportunity to find and cast that net as wide. Because again, your job as a CEO and founder is to have money and find money well before you need it. So if you are trying to find money at the bottom of an academic or an environment or a business cycle, you're down here trying to find money, you're way too late. You need to find it up at the top, because your valuation better, you have the ability to service that debt that Paul was talking about. Those are the kind of things that come with sets and reps in time of running small businesses. But the other thing is, if you're not comfortable with a P&L or a balance sheet, hire the right folks to do that for you. Don't dismiss it and push it off, but understand the fundamentals that allows you to do what only you can do, and you can bring the right folks on your team. So as you develop your team, think about who's going to do what, because it's important that you have that dichotomy of work and effort, so that you're not duplicating, nor do you leave big gaps out there. As an angel investor, I'm investing in the team, the A team, with perhaps a B idea rather than something backwards from that. So due diligence around the team, due diligence around the concept, the business are all critical components to being able to go to the market. And I say the market broadly defined as the capital market to find money. I think, John, what you're going to deliver here through Valor Capital is really a unique equation. It's a buy side and a sell side, and you're bringing folks together in a marketplace that would not usually come together in this environment. I think you're onto something here, because it's going to meet the needs for investors to look at a broader portfolio of where they're putting their dollars. But it's also on the buy side of those folks that need some access to capital that would be well below the radar screen for either angel investors or venture or kind of more sophisticated environments out there. So this nexus that you're pulling together is a pretty interesting space for sure.
Thanks, Rob. And I want to reward you for saying that by going back to, you mentioned due diligence, the words due diligence. And I know we were talking about this earlier. Like, what do you mean by that? And like at a high level, and then what are some of the important aspects of it? But a question for the entire panel is relating to that is, from your perspective, what's important for a potential investor to know or think about before considering investing in a private veteran-owned company? Like, what are some of the things they should think about? But we'll start back with you, Rob, if you don't mind, since you brought it up.
Yeah. So due diligence is a simple statement. It means do your homework. What happens after that simple statement is really important. So it means looking at and analyzing and assessing the construct of the business and the construct of the teams that are going to lead this, whether it's a founder of one or it's a management team or whatever that is look, use the internet to your advantage, study the marketplace, study the product market fit, understand the business plan. That's due diligence. And then you can go into some financial aspects. If this business has already generated revenue and profit or loss, to understand the financials behind that. So due diligence means do your homework and the assessment at the right levels. You can get stuck in rabbit holes on due diligence, but if you're going to, and it depends on your appetite for risk. If you have a lot of money and you're willing to make small bets, then probably your due diligence model is a little different than a very tight portfolio to invest, and you're going to make larger investments. So it's up to you to determine your confidence and level in due diligence, because there are companies that do due diligence. It takes weeks and months to kind of do it. That probably it means you don't trust the team, the founders, and in this environment, we're going to kind of put those two together, which means I would trust implicitly somebody that has worn the same T-shirt that I have in the past, and that goes a long way in terms of who I'm going to invest in and what companies I'm going to invest in going forward. If you look at the challenges that small businesses, especially veteran entrepreneurs, they just don't have the sets and reps yet that often come. And then I say that often come, that means that you can show a business history, you have collateral, you have some of the other things that are necessary for more standard kind of financial investment transactions. And you can be very transactional in how you collect money. And that's one way to do it. If you want just money to do something, that's okay. But if you want strategic partnerships inside of how you collect capital, I think that's another conversation. And so going after the right money with the right strategic intent to fill a spot on your product or your market development or your go-to-market strategy, those are important things to think about where you go out for money. Again, I'll try to sum it up. Good founders with good ideas will find money. It takes time. It takes some effort. And the last thing I'll say is don't be afraid of the word no, right? That means an opportunity, which means look at your story, look at your pitch, understand what went right and what went wrong, and then go out to the next one. If you are risk averse or you don't like the word no, right? Entrepreneurship is probably not the hobby that you want to get into at this point.
Yeah, that's great advice. Dennis, I'd like to ask you a question because I think you've done a lot of investing in veteran-owned businesses. Put the investor goggles on. How do you look at some of the things that Rob just mentioned? People raising capital need to think about. How do you look at it from an investor perspective more heavily?
Yeah, and I appreciate it, John. From an investor perspective, from a due diligence perspective, I expect that founder CEO to know their numbers. Literally being able to pull them out of their pocket and talk, not getting down to the sixth level, but to be conversational about this is where I'm at, this is where I'm going, and this is how I'm doing. And the next level to that is this is the support that I need. Because I've had opportunities to invest in veteran-owned companies and didn't invest because the founder CEO didn't know their numbers. So that impacted, like what Rob talked about, the trust factor. Even though we wore the same T-shirt, I was like, I'm not sure because they haven't taken the time to do that. So that due diligence part, not only for me, right? Because you need to know, everybody needs to know the numbers, but then you need to do the due diligence on the founder CEO themselves. What's their experience and everything else. And are you and them, the business itself, a good culture fit? Making sure that your values and your priorities fit with that company and what their mission set is and what they want to do. And one of the things that was talked about, I'll take my investor hat off and put my coach hat on, if that's okay. There's a couple of assessments out there that I have actually used to support small business owners. And as a Gallup Strengths coach, it's a really easy assessment to access. And you can see if you have the right people in the right seat, right? If they're executors, if they're relationship builders, if they're influencers and strategic planners, right? Because we need all of them to make sure that things are going in the right direction. So to make sure, thinking about that, and or Patrick Lencioni's 6 types of working genius, that's another assessment that you can think about and do for your team to make sure that you have the people plugged in at the right phase of the work cycle.
Right. Excellent stuff. I picked up on the word team there and what you said. One of my pet peeves in working with a lot of companies trying to raise capital is, in the reality, the ones that get capital successfully are a team. We've got this culture in entrepreneurism who the founder is. I'm a founder. And quite often companies that can scale effectively have teams. You need a good CFO, a good operations person, you need a good salesperson. These are teams, and rarely is all those skill sets in one person. And I think one of the advantages veterans have is they're used to teams. And if you were an NCO or an officer, you're used to having people that were experts in those different areas that you weren't an expert in. And so that's another unique strength, I think, veterans bring to the table as leaders, whether you're an NCO or an officer. You're used to that team approach to accomplishing the mission. So, and there are ways, if you're an investor, to assess the team. And Rob alluded to that, and so did you, Dennis. I appreciate that. So springboarding off of that, both Carrie and Paul are scaling their successful businesses as a franchise model. And Carrie, I'm going to start with you. I know you have a bit of a due diligence process itself. I don't want to put words in your mouth when it comes to maybe awarding a franchise. I mean, can you talk about the topic of due diligence a little bit more from your perspective?
Sure, John, I'd be happy to. And I feel like, just listening to the conversation, I actually kind of realized that I, as a franchisor owning a franchise and willing to work with franchisees, I actually am kind of sitting in the investor seat. I honestly never really thought about that until we started having this conversation. But I'm investing in a franchisee, and they bring a set of risk. And I think, Paul, you would agree with me. A franchisee brings a set of risks to the table with them. So we do a lot of things. We do a lot of conversations in the very beginning, just trying to get to know one another. And to put it in the words in the vernacular we've been using, I kind of want to see what your T-shirt looks like. What's on the front of your PT shirt, right? What does that mean to you? What does that really mean to you? So for me, really leaning on the values that our tribe has and finding that veteran that still is displaying those core values that we've all been taught and that we've all ingrained in ourselves. And I see a lot of veterans, John, that don't still carry on a lot of those core values. So I think it's really important that when we're looking at investing in veterans, that we really take a look at what are those core values that we may still carry because we're veterans. Are they still in that prospect or that company that I'm thinking about investing in? We also use some personality profiling tests like Dennis was just talking about. We're going to look at their financials. We're going to look at their financial acumen. I actually require it, to be honest with you. If you're a veteran and you're coming out of the military and you don't have any business experience whatsoever, you need to get into the Vet to CEO program, the Warrior Rising program, get on the SBA and do their class. Whatever it is, you've got to get some basic business acumen before I can even really have a conversation, because we're talking in two different worlds. So those are kind of some of the things that I do in due diligence, taking my time to award a franchise. Even though I only have one under my belt, I've talked to a lot of people and I'm starting to recognize where risk factors show up. And I'm not sure I really want to walk down the trail with some people just because I feel like maybe the values aren't where they need to be. Maybe the trustworthiness isn't there. T-shirt's a little faded maybe, and we need to really kind of talk about some standards and expectations and things. So hopefully that answers your question, John, in terms of how I look at this from this sort of perspective in due diligence.
Yeah, what I love about what you said, and I didn't know this till we had this conversation today either, Carrie. It's like with a franchise system like yours and Paul's, and I'm not blowing sunshine up your backside intentionally here, but you actually do some due diligence ahead of time, like two levels of it. Not only are you doing due diligence on a franchisee, so it's kind of passing your test, but now an investor who might give that franchisee the money they need to be successful as your franchisee. If an investor might put some weight on the due diligence that they already passed with you. So that's kind of an aha moment I've had as well. But thanks for that. Paul, over to you. I know you've had a similar experience with Carrie and maybe a little bit longer than where she's at right now, but any perspective there?
Yeah, I mean, frankly, we've learned a lot of lessons in the selection, awarding, training, onboarding of franchisees, and we made some mistakes, and we're going through the process of resolving those. One of the things I would say with respect to kind of due diligence and what we've talked about, both from an investor standpoint and from a business owner standpoint, again, we don't have a whole lot of experience in creating pro formas and looking at those types of things. And so I have a class I kind of give, a webinar that we do, Franchising 101. And I said, well, the one thing about veterans is we've all probably done MDMP or some version of that, military decision-making process. And I said, if you're trying to get an SBA loan, you need a 36-month pro forma. So how do you do that? Just Google a P&L and get the standard lines, revenue up top, cost of goods sold, expenses, etc. And you can just take a standard P&L and put that in column 1. And then column 2 through 37 is your 36-month projections. And how do you do that? So you got this Excel sheet open, you got a Word document open. Before you put a single number in an Excel sheet, column, cell, you write in your Word document, fact, colon, or assumption, colon. And you tell yourself why you wrote that number in there. And it's either based on a fact or an assumption. And so as we go down, what do we do when we're doing military decision-making process? We have to turn facts into assumptions. How do we do that? Market research. In the case of MDMP, we develop a collection matrix, an intel collection matrix, and you got to have a primary, secondary, and tertiary observer set up against that intel that you want collected. And so, and I just try and use that same kind of military vernacular to say, we go hunt the intelligence. And once we get that, example, rent. I need to do a market survey. So I find a realtor that's going to do a market survey. I need 2,000 square feet of mixed use. It's going to be $1 per square foot. Okay, assumption. 2,000 times $1 is $2,000 a month rent. And then you get a market survey and you got 3 properties, and now it's 1875, 2,000, and 2,200. Okay, now you're narrowing it down. But now you sign the lease and you go in there and you say, fact, I signed a 3-year lease, $2,000 a month, escalating at 3% per year. So a month 13, it goes up 3%. Now you have a fact in there. And as you do all that for each one of those, you're doing that due diligence. And in the end, you figure out, it's going to take me 6 months to become profitable, 8 months, a year to become profitable, which is not unreasonable. Most businesses don't become profitable in their first year in business. So you have to have, that doesn't mean you're not successful. You just have to have the operational capital there to sustain that. And that's really the due diligence process of just doing the hard stuff. And if you're not willing to do it in a pro forma before you open your business, you darn sure aren't going to be willing to do it after you've opened it. So, and that's when there's more risk, and gets back to what Rob talks about. If you do it, the SBA will give you money if you show that you're profitable, and you can cover the debt service for the loan that you want to get when you do that stuff. That's really what it takes, is that level of due diligence.
Yeah, and I love the fact you brought up the decision-making process, because that's one of my favorite things to talk about too. Is in the military, there's actually a manual on it, right? I know the Army has a manual on it. So it's like we teach decision-making in the military, and everybody knows what that process is, and it follows us to our grave. Most of us, then we're wired that way. But I think as a potential veteran who might invest in another business, to your point, we can use the same process to evaluate an investment. What assumptions is this company basing their plan on? What's their mission? What kind of facts have they gathered? What's the quality of those facts, right? These are all things we're familiar with as veterans that we can use as in potential investors in other veterans businesses to ask the right questions. So I love that, Paul. I do want to show a few models just to spark some conversation. I've just got a couple of slides, folks, just to share a couple of models, and then we'll come back to the panel. But panel, before we do, is there any alibis, anything you guys want to mention before we cover some of these models? Nope. Okay. A couple of things to think about, folks, just because as potential investors, just some food for thought and some images to think about. First of all, we are SEC registered broker dealer, and we're duty bound under SEC regulations to abide by certain rules. One of them is we might make some comments off the cuff or say something that in context might not be 100% accurate, or in what you need to make a decision to make an investment. So this is a standard disclosure slide for me to say, our advice to you is any kind of investment you make sure you do the due diligence we're talking about today, and that you use that information to base your investment decision on. But one of the questions I like to ask people in some workshops I do is this one, which is fairly easy question, but some people actually get it wrong. And the question is, which one of these things did the Securities Act of 1933, which was passed 90 years ago, folks, make illegal for most of us? And yep, you guessed it, investing in a private business. The federal government, when they passed the Securities Act, basically said, unless you're wealthy, known as an accredited investor, that definition for what makes an accredited investor has changed over the years. But basically, they've said, unless you're somewhat wealthy, you cannot invest in a private business. And what you have now is 3 generations of Americans whose families haven't talked about investing in private businesses. That all changed in 2012, and there has been some enhancements to the Securities Act of 1933 over the years, including a major one in 2012 and some enhancements since 2012. And now we can all invest in private businesses again. I won't get into the weeds on how that works, but we can. But it's foreign to many families. In fact, statistically, only 11% of U.S. households fit the definition of accredited investor. That means that, the rest of us aren't in households that have talked about it for 3 generations. But this model helps us kind of just set a baseline. We're used to if you're not accredited, when you say, I'm going to invest in, say, Tesla or whatever, you're going to go to the stock exchanges, or I'm going to buy stock in Apple, and we go to the stock exchange through whatever means we do, and we buy stock and we sell stock. But that's actually called the secondary market if you look at the vertical axis there. And the reasons it's secondary is it's the second place where that stock is sold. The first place it's sold is in an initial public offering at the bottom. And only at the bottom right is where the money that's invested in those shares actually goes into the company itself. After an IPO, those same shares, once they're bought, are purchased and sold in the secondary market. So when you buy that stock in Apple, you're actually buying it from some other person that owns that stock that wants to sell it. That money's not necessarily going to Apple at all. Where we're talking about with private companies is the lower left. It's the primary way a private company brings in capital from investors, and it does so under certain SEC rules called exemptions. And there's 3 kinds: Reg A, Reg D, and Reg CF. But in the context of today's discussion, we're talking about investing in the lower left, not the upper right. And that is actually foreign to many people because we haven't done it. Our families haven't done it because we don't come from rich families, if you're like me. Here's another surprising fact. Fun fact, folks. 1% of businesses in America, 1% are in the upper right. That means that 99% are in the lower left. So 99% of American businesses, until recently, you couldn't participate in investing in them. Guess what the wealthy do? They invest down here. It's known as alternative investments as an asset class. And the word alternative is used because it's an alternative to the public exchanges. So these investments down here, these private investments, don't necessarily ride the stock exchange going up and down. They have their own return profiles and own timing of when they might get potential returns. And that asset class is called alternative investments. And take that 99% and cut it in half, because half of that 99% are really one-person businesses. But the ones that employ people and all that is still a good chunk of American businesses that until recently we haven't been able to invest in. So just keep that in mind. When we're talking about veteran-owned businesses that are private, we're in the lower left. And it's a asset class that most Americans, unless you're from a wealthy family, we're not educated in understanding how that works. And we haven't done a lot of it. So that's part of the challenge that's out there. There's common types of investment opportunity types. You see them on the slide. I'm not going to go through each one. But on the right, you have equity where you're buying ownership. And on the left, you have debt, and the revenue share agreements and small business bonds are very popular these days. And I'll tell you why in a minute. But, these are the different types of investments that can be made. The reason that's important is really comes down to something called liquidity. How fast can you get your money back? So on the left side of the spectrum, it's very easy to get your money back. And this is where the public stock exchange is great, right? So if you want to buy Apple stock today and sell it 2 days later, you can do so and get your money very quickly. It's very liquid. When you go into equity investing, like you see on Shark Tank and all that stuff that gets all the hype, you're way on the right. So these are wealthy people that don't need their money back anytime soon, are going to buy shares or something called safes, where you're going to have to wait till that company is sold or goes public before you get your money back. That could be never, or it could be many years, right? But in the middle is where a lot of us might feel comfortable, right? This is where we're investing in debt, not equities. So we're actually acting as a mini bank for these companies looking to raise capital. And we might invest in a revenue share offering or a small business bond, and then we do get paid at some schedule interval because of that. And that's what we're seeing the most of right now, folks. Debt deals where investors are receiving passive income, and you don't have to wait till the company's sold before you get your money back like you do with an equity investment. And veterans investing in other veterans, they're kind of tagging along with the business. And as they succeed and crank out dollars as part of what the business does, they get to share in that without having to wait till it's sold. And then the last slide I want to go over is some food for thought, and this reflects some of the panel's thoughts, are really this fourth. We recommend that you look at every investment opportunity through 4 lenses. And now these are not equally weighted, by the way, depending on the circumstance or the business. Number one, we call this affectionately the 4 M's. Number one is the market. Do you really believe in the product or service that the company has to offer? Yes or no, right? That's pretty easy. Second one is a little more difficult for some companies, and that is the mission. This is the why of the business. So do you believe in why the company exists? Like if it has something to do with, if you care about global warming, for example, and their product has something to do with that, you might really love their mission, right? Management. This is where being a veteran really pays off, right? So this is where being a veteran-led company or woman-owned or minority-owned, this is where if you're in one of those categories, it actually helps you if you're attracting investments from those certain demographic places for investment as well. And then last but not least is the money. What's the potential return on investment? So when you think about even in the public stock market, usually you're thinking about these 4 things before you write a check or do a wire transfer, right? But when it comes to veteran-owned businesses, this still applies. And the management piece component of this might be what stands out for you and has more weight than the others in some cases. At least that's how the theory goes. So just wanted to share some models with people so they have something to think about if they want to get into being an investor in general, but also as it pertains to veteran-owned investment opportunities that are out there. I'm going to stop my monologue here and defer to you guys, the smart people. I feel like Gladys Knight near the Pips. Hopefully people know what that means. But any thoughts on those models? Anybody want to add anything to that? Have I missed
John,
anything?
So no, so again, I mentioned this kind of earlier. I think the space that Valor Capital plays is a really neat kind of nexus. It's not as linear as your quad kind of speaks to, because it fits both the buy and the sell side of that financial equation. I think you are connecting an investor group called veterans and veteran entrepreneurs that may have some additional money that they're willing to apply to a different investment model than going to a pure angel investment or just putting in the stock market. And I think on the buy side, you have entrepreneurs that are veterans that are now able to come to a community with a little bit of different model. I think, Carrie mentioned there's different versions of the t-shirt, and I think that speaks to the due diligence out there. But there are very few. I mean, there are some veteran venture or vulture capital kind of organizations out there, but there's nothing that is really playing in the space like you're trying to develop. So I think, as somebody that I would love to come as an investor and a potential buyer of this capital, is something that doesn't sit out there. So the more that we can, talk inside of our ecosystem called veterans and veteran entrepreneurs is going to be helpful, because I think this needs some inertia. And with that inertia comes additional investors and additional entrepreneurs. And I think when we show success over time, return on investment or growth of a business, those two financial markers will bring more folks to the table pretty quickly.
Yeah, thanks for that, Rob. And to add to that, nothing we're doing is earth-shattering other than seeing what's the disruptive nature of the internet affecting that buy and sell side, right? So you've got the internet allows us to reach all these veterans that only represent less than 2% of the population and aggregate them in such a way where if there's interest on both sides, either on the investor side or the entrepreneur side, now we're able to efficiently have that exchange go on, right? And that's what I think we're seeing. And the more we can kind of build that momentum in that network, the more efficient the whole system will be. And then as a group of veterans, we can share in the success of those that step out that want to start a business, right? So that's kind of what we're seeing, I think, to your point.
Yeah. Just to clarify, so it's not only the aggregation of that, it's the actual execution that I think, comes to the table. I think that's the piece that you guys are bringing the opportunity to the table, because, right, a lot of folks don't understand, the liquidity, illiquidity kind of market, and then really things that have changed in the last couple of years that allow, non-accredited investors, lack of a better word, unsophisticated, fancy investors, to have access to asset classes that were not available to them. And so as you think about your portfolio, right, you buy different stocks as you want to diversify. This is now another opportunity, a completely different asset class that allows you, in some cases, take a little more risk, maybe a little less risk, depending on a venture debt or equity. But it gives you the opportunity to play into spaces that are that have been kind of excluded from the past. Now, that also means your due diligence requirements have to be better than listening to one of the news channels and saying Apple's going to go up tomorrow. Let me buy it today, and I'm going to make that 0.2%. This is a very, very different construct than what you're talking about there.
Yeah, thanks, Rob. Good points. Paul, did you have something?
Yeah, I was just going to say, one, I mean, I didn't even know about much of this until I met you and started talking to you about it and understanding the kind of the things that have transpired since 2012. But what I have learned is, as a small business owner, I was in the military for 23 years, and then the last 10, after I retired, my peer group is now CEOs of other companies. And so I've just been exposed to a whole nother world. And I've been exposed to people now who are my peers who have been investing and working on building wealth their entire lives. And most people who are veterans haven't been doing that. We've been in service to others our entire lives. And so we haven't been worried about building wealth, and we don't necessarily understand that. And what I've learned is really the way people build wealth, it's not through how much salary, how much you get paid. The way people build wealth is you have to own things. And most really wealthy people own real estate or they own businesses. And most people who own businesses own fractions of other people's businesses, stocks, bonds, mutual funds, et cetera, and in the secondary market, like you talked about. So this really is a game changer that allows people to get into early stage private companies with people that they know and trust. They can understand the concepts and they can grow along with them, because typically we don't have the access to capital like really rich people do, but we now have the ability to use our network, to use our hard work, to use our reputation to build long-lasting companies that build value and bring other people along for the ride who believe in us and understand that and who have vetted us and checked their performance and done the due diligence and things. So, I mean, I really believe it's a game changer, but we just have to understand it and get used to it, because it's so different than what we've been doing, the way we've lived most of our lives, not worrying about building wealth. But now we have the ability to do that.
Yeah, great point. And if you remember that slide I had up with, like, what's the one thing that they made illegal, right? One thing the government didn't make illegal in 1933 was buying rental property. And you can talk to almost everybody about buying rental property, like, yeah, no big deal. Someday I might do it. And, I have a cousin that owns 2 apartments. So there's like no wealth requirement to buy rental property, right, by law. So that's an example of something everyone's familiar with. What we're at the beginning stages of people becoming more familiar with the way you just talked about, Paul, that, we can pick and choose where we might put some of our money in a private company with somebody we trust, because there's some connection there and belief in their business, and build wealth that way as well, just like you do with rental property. So it's an awareness issue and challenge and opportunity all at once. So great points.
John, there is, I think,
Sure.
talking about connection, Philip had a question in the chat that I think is useful. Other than, these educational seminars and panels, is there a community being built around Valor Capital for folks to get plugged into?
Yeah, Philip. Well, Valor Capital certainly is one. You go to our website, there's a page, and at the end here in a few minutes, I'll put a little thing up there. You can click a button, and we just ask for name and email address, period. And by the way, there's no fee or obligation to invest. We're just trying to aggregate people that are interested in veteran-owned businesses. There are other groups that I mentioned at the beginning of this webinar, which I'm big fans of, Local Vest, Veteran Ventures, Task Force X, but they, unless I'm wrong, and they can correct me if I am wrong, you have to be accredited to invest in most of their stuff, but mostly veterans are investing in those things. Other than those that I'm aware of, and what we're doing here, the reason we're doing it is because I haven't seen anything else, and we actually would welcome other organizations jumping on board, trying to build a momentum around this. So a long-winded answer to your question, Philip, but I'm not aware of any personally, unless one of my panelists are. No, so it's a tall mountain to climb, but somebody's got to do it, right? So we want to start the ball rolling and try to aggregate things. Our attempt at that is the Valor Capital Group. We will learn as we go and see how much momentum we can build. But, a little personal opinion of mine, since I kind of want to wrap it up. And panelists, I'll give you a minute to think about a closing. But I think we have it backwards in this country, personally. I'm involved with the Honor Foundation, Warrior Rising, and it seems like when people leave the military, we like, okay, quit being that person. Let's teach you a new language, put a suit on you, and make you blend in with everybody else. And I don't think that's what we should do. Well, I'm biased because I'm a veteran. I think the skills we learn at a young age in the military is a national asset. The taxpayer invested in us. And that raw material I spoke about earlier is kind of wasted, rots away in cubicles across the country, instead of taking a portion of those, not for everybody, but taking that raw skill set and migrating it into small business leadership to continue to serve the country as small business leaders. And those that do need help, they need capital, right? So I think that at the core of it is the opportunity to either believe that or not. And if you do, to kind of rally around those that want to move forward and support them after you do due diligence. So that's really what we're trying to do here. So I'd like to close it out because we like to end on time around here. Did I miss any questions in the chat box? If any of my panelists saw any?
John, there was some comment on incubators and accelerators and what's the kind of value to that. I think that's an interesting topic. I can provide a quick thought on that. So close up. So I think incubators and accelerators are great. I think having access to that expanded ecosystem of ecosystems or network of networks is phenomenal. But you need to, as an entrepreneur, right, understand the point of reference of the information you're receiving and use that as one of many different points. If you look at somebody who was a little bit of a unicorn and they're telling you to go left and look up, that's one data point. You need to understand kind of where that data is coming from and whether or not it's applicable to what you're trying to do. So make sure you spread your purview, your analysis, your due diligence as wide as possible. That being said, I think it's great to talk to other folks. I think Paul's in a CEO group that other CEOs are talking about, founders talking to founders, people that have similar experiences to add to, be complementary to the military experience. I think just adds the opportunity to kind of move this process a lot faster. But again, you make the ultimate decision. Just make sure you're at the right level of your appetite for risk, and make sure you're well ahead of your cash flow needs, because you don't want to go find money when you don't have money. That's the worst time to do it. But again, John, I really appreciate you putting this together.
Thanks, Rob, and thanks for picking that out of the chat box. Paul, over to you for a closing.
Yeah, I talked about, there was a study done by the Institute of Veterans and Military Families focusing on veterans in business, specifically veterans in franchising. And I found the stats, and it's really alarming to me. Post World War II, and I'd argue, it was called the greatest generation for a couple of reasons. One, we fought and won World War II, but we created some great citizens for the United States. And 49% of World War II veterans went on to become business owners. I mean, it's amazing. These days, since this century, since 2000s, only 4.5% of military personnel have gone on to launch their own company. And the study looked at why is that, and one of the conclusions was risk and financial understanding and those types of things. But I really think we need to do something to change that, because that's primarily how people build wealth in the United States. And I think personally, the people who have dedicated their lives, or a good significant portion of their lives, to supporting and defending the Constitution of the United States and our way of living and our way of life, they are more appropriate and more deserving of building wealth in their lives. And what we're trying to do is introduce opportunities for them to do that, whether it be through veteran business ownership or investing in veteran businesses. And I salute you for putting this together, John, and for Valor Capital and building the Valor Capital Group. And look forward to greater things to come. So thanks much.
Thanks, Paul. Great stuff. Appreciate it. Dennis, over to you. Just closing thought.
Yep, absolutely. Thanks again, John, for putting this together. From an investor side, think about the trust formula. Are you reliable? Are you credible? Have you invested in our relationship? And what's your orientation in terms of what are your motives, right? Are you team oriented? Are you just the founder CEO without a team? Because those are the things that investors look at, right? Do you do what you say? Do you actually know your stuff? Do people matter? And are you in it just to win it for you or for your team? So again, John, I appreciate the opportunity and look forward to seeing, how I can continue to support this in the future.
Great. Thanks, Dennis. Appreciate it. And last but not least, save the best for last. Carrie, over to you. Oh, you look good to us. All right. Well, she's gone mute on us, but that's okay. That's why we have redundancy with everything we do here. But hey, I want to thank my panelists. They really are the stars of the show here. They're out there doing it in all different ways, shapes, and forms, and have done it. Thank you very much. Hopefully you've gotten something out of this. If you were here live, thank you for your questions. And if you're likely watching the recording, feel free to contact us at Valor Capital. And we hope you join the movement, so to speak. Thanks, panelists. Appreciate it. Have a great day.
Thanks, John.
Thanks.